In my previous video, I looked at support and resistance zones. I covered how to identify them, why they work, and how they form the basis of a manual trading system. If you haven't already watched it, I suggest you do so, as it's foundational to everything I talk about in this and subsequent videos. Okay, so once we've identified these zones, what comes next? Well, the zones show us where to look for potential trade entries, but we still have to decide which direction we're looking to trade and in what circumstances we place an entry. Now, neither of these decisions are easy, and it's crucial to get both of them right consistently if you want to be a successful trader. Now, let's say here that we want to go long off this zone when the price returns to it. Now, we could, of course, just place an entry appending here, waiting for the price to hit it, and then we're in a long with the stop out the other side. We just hope it works. And that is a method that actually some people do use, and with some degree of success. What it requires is a very good eye for determining these zones, and also a fair degree of luck, because the price will sometimes just bust through a zone, no matter how accurately you've identified it, and you'll take a loss. And that loss may be unnecessary, which is why I created this video to look at price action, which is something I use as a filter to keep me from entering trades on these zones. I want to have evidence that the market is going to turn in my direction before I enter my trade, even if that does sometimes take my entry a little bit away from the zone itself before I enter the market. So, what is price action? It's understanding these things, candles, and what they're telling us. So, let's go in a bit closer and take a look at these candles and see what they have to say. Each candle has 4 elements of data that comprise the candle. It has an open, a close, a high, and a low. Very simple. The open and close are defined by the body of the candle, which is wider than the tails at the other side, which take us to the high and low. And as this is a bullish candle, I know that therefore that the open is lower than the close, so this is the open, that is the close. This tells us that the bulls were in control for pretty much the entire duration of this candle, which is a 1 hourly. There was a small rejection at the very end of it. This candle was completely the opposite. The bears were in control. This also said that this completely erased everything the bears did during the preceding candle. So each of these candles will tell us a story about what the market was doing at that period in time. Now, there are other ways of viewing the market. Candlesticks, traditional candlesticks such as these, are not the only way. Now, all of these methods, including candlesticks, are just an abstraction of the constant flow of price in order to put it on a chart in a way that we can visually analyze and understand. The reason I stick with candlesticks is because most everyone else does too. Therefore, any price action signals given on these charts are more likely to be followed through on and work, therefore, if I place a trade on them, than price action signals given on some of the more exotic charts. But I'll quickly show you some of what they look like. Now, this is Heikin Ashi on the Aussie H4 chart. Now, I'll just compare that to the candlestick chart. I won't spend too long on this. Let's look at this move up here. We've got a few down candles here, and some of these, there's some indecision going on here before another strong move and more indecision. But what does it look like on the Heikin Ashi? Well, there's only one tiny little down candle there. The rest are all white. In other words, it smoothed out the trend by shifting around the opens and closes in order to show us that the trend is strong and to stick with it. That's the whole point of this. It's built to assist in trend following systems. Now, Heikin Ashi can be useful if you wanted to use the price action that it generates, because you can still draw support and resistance zones off this, and you can still see long tails that are generated. The high and low are still exactly the same as on the traditional candlestick chart. So Heikin Ashi is actually something that I wouldn't have any problem with people wanting to trade that. Not that I have any problem with anything anyone wants to trade, but I can see how this could be valid. I myself don't trade it. I prefer to stick with this simply because it's what I'm used to. The other two methods go in quite a different direction. Instead of the candlesticks, as on these charts, being defined by a period of time and what the price did during that time, these other methods look at the actual price movements regardless of time. The first of these is Renko. Each of these candles only forms when the price has moved by a set amount. As soon as it's moved out of that amount, it'll start a new candle. And each candle could take 5 minutes or 5 hours or 5 days to form. It really doesn't matter. Another one along these lines, and this is a very old type of chart, is point and figure. In this case, it's creating boxes rather than candles. And each of these charting methods give rise to different types of analysis. Again, from my point of view, they're not what the big traders are using, therefore I prefer to steer clear of them. There are trading systems based around these, but that's a whole different subject of discussion and not something I'm going to cover on this channel. So, back to the candlestick charts. Now, as each of these candles tells us a story, they're each interesting in their own way, but some are more important than others. Firstly, I'm most interested in candles when they hit my support and resistance zones. I don't really care quite as much about what they're doing when they're in no man's land in the middle. And secondly, I'm very interested in candles when they tell me that the price may be about to reverse when it hits one of these zones, because I'm looking for reversals in order to trade off these zones, for bounces off the zones. That is the core essence of the type of trading I want to do. So if I expect the big money are waiting for the price to hit these zones, which after all is why I've drawn them, then the candle should tell me if they're actually entering trades. So what are the types of candles that show me that a reversal may be on the cards? Well, there are many types of candles actually, but I'm going to concentrate on just 3 of them because they occur very commonly and they're quite reliable. The first of these are what are commonly called in Forex circles, Pinbars. And what they are is a candle, such as this, with a very long tail on one side. And what I want for a reversal, as this is an up move and I'm expecting I may be expecting a kick down out of the resistance zone, what I want is for that tail to be on the upper side. So that shows that the price has been pushed up into the resistance and rejected. Okay, you can see lots of pin bars everywhere when you start looking. Down here as the price came to touch the support, we got 2 of them here. But it wanted to come down and retest it again. There's a little one there before it finally kicks up and away. That also shows that not every pin bar will result in a good trade. You want to save it for when they're right into the resistance zone or when they're quite large and dramatic and emphatic in nature. The second type of candle I'm looking to trade is the engulfing candle. And when you get an engulfing, it's usually an abrupt change of trend or a takeover of a new trend after a period of consolidation. Here's an example, and if I can just zoom on it, of an engulfing right here. Got this quite distinct support layer here, which has been tested already. Got a nice pin. Price has come back, bounced off it. Now it's come back again, and here we've got a nice big bullish candle with the bulls completely in control, and they've erased all evidence of the previous bearish candle. And that starts the new trend up and away. It does come back to retest, but if I placed a stop under the zone after entering there, it would not have hit my stop. And it would have, depending on where I put my take profit, I would definitely have profited from that trade, as long as I didn't cover break even too early. So engulfings are definitely something you need to look out for. Here's an engulfing here. On the other hand, though, it only got so far, and then we have a couple of bullish pins. The price then comes back and retests this resistance zone. I get another massive bearish pin. Even then, it wants to retest a bit more before finally it starts to kick away from that zone. Another period of consolidation here. Near the end of it is another bearish pin, and then away we go to the downside. Here's another example. Here, a resistance level there comes up to test it, and we get a beautiful bearish engulfing. So that's what the engulfings look like. And you trade them by waiting for the candle to finish. It's very essential, and then look to trade if it continues in that direction. The last one is the indecision candle, and these occur less frequently, but can be equally as powerful in terms of finding an entry. And here's an example here. This is again the H1 chart on the Aussie, quite close to the end. They can be harder to see. On first glance, you look at it and think, is that a pin? But no, it's got a long shadow there. But still what they're telling you is that there's a mighty struggle going on between bears and bulls here, and it's in a support zone after there's been evidence before of a bit of bullish interest here. And as you can see, that formed the low point. After this, the bulls began to take over. There's another bullish pin, and then away we go. So when you see a large indecision candle, such as this, with the body quite small and around the middle, long tails on either side, and it's in a zone, take good notice of it, because it could signal that a reversal is on the cards. The other thing you'll notice on here is that these bars don't exist in isolation, these candles. Often they'll be together. You'll see two pins. You'll see the indecision. You'll see an attempt at a bullish engulfing, another pin, a small bullish engulfing, and then away it goes. So when the price visits these zones, the more of these candles you see in combination with each other, the more interested you should get in the breakout of a new trend away from the zone. Now, there's one other thing that knowing about these candles and looking for this price action will do, and it will what that is, it will stop you from fading the market, as I previously said. For instance, if I'm looking for a short off this resistance zone here, or was resistance there, the price comes up to it, and I'm starting to get interested because it rejected away a bit, but then just keeps going through. There is no short entry if I'm waiting on price action to give me that entry. There is a bearish pin, but the price doesn't even go below it, let alone come back out of the zone. It just continues on up and it's broken the zone. And in fact, it tests for support later on. So looking for price action, regardless of the time frame that you trade, right down to 1 minute, this still works. Looking for price action will keep you from fading the market and getting into a trade in the opposite direction to that which the price wants to go in, and therefore save you from taking losses. And what we need to do as traders is keep our accounts alive, protect the balance we have in them, only enter trades when there's a really good probability that it's going to go in our direction. So this is a very good filter, price action, for keeping you out of the market and out of bad trades. And so for me, it's an invaluable tool. Just a couple of other examples before I move on. Let's go out to the daily chart, because you can see these things no matter what time frame you trade, as I said. On the daily, what do we have here? Down the bottom as it hits the support zone, a bullish pin, a fairly large body, but it's got enough of a tail for me to call it a pin. There's a pin there. It still keeps being pushed back down though with a bearish engulfing, but then another bullish pin. You can see there's enough evidence here that it's finding support just by looking at the candles, and then it wants to move up, and then it's broken out and away. Wherever I look on this chart, I can see evidence of the same kind of thing. At these turning points, there are either pins or engulfings, more often than not. See this beautiful little pin here before it goes on a really nice run down. That was over the new year in 2016. Up here, what do we have? A very large indecision candle into the resistance zone, and so on and so forth. Some of these things are even seen on a weekly. There's that rundown just after Christmas, and there is a bearish pin even on the weekly chart. Look at the bearish pin that's formed there before this move down, and so on. Once you start looking for these things, you will see them everywhere and see how powerful they can be. So that's it for price action in this video. It's a very strong method for filtering trades, keeping you out of the market when you don't want to be in, and helping you identify good quality setups. But there are other methods for filtering trades as well as price action, and also for helping you determine the direction you should be trading. One of them is trend lines, and that's what I'll be looking at in the next video. So, good trading, and I'll see you then.